So same pair, 1, 2, 3, 4, 5, 6 different time frames. And different psychologies are represented on almost each of them, at least variances of the different psychologies. Okay? So that's number one. Number two is if you're a very new trader, that's fine. You know, this is a good thing to at least start thinking about. But I would probably call Fibonacci slightly advanced. Not incredibly advanced, but slightly advanced. Okay, because you've got to at least understand what a trend is, how to identify a trend, how to identify the highs and lows in a trend. You know, not very complicated stuff, but it's probably a step two in terms of analysis. So this is not necessarily a basic topic, but it's one that I think after a while, after a little bit of practice, is going to seem very simple. Okay? All right, so let's go ahead and start to analyze the 30-minute chart here and talk about where the support and resistance is on this time frame. All right, so first of all, what do I have here? I have a little bit of a recovery, don't I? For those of you that are looking at the daily chart, you'll know that, and by the way, can I get rid of these notes? Is there anything anyone wants to write down from this? I'm going to go ahead and clean this chart up here. All right. Okay. So we're looking at the market here. Prices have made a low, and by the way, if you take a look at the daily chart, we made kind of a soft double bottom, didn't we? Well, maybe it may not be soft. Let's see what the two lows were. This low back here was 1.0137. Today's was 1.0106. So it's a 31 pip difference, or what I call variance, between the two lows. But on a daily chart, with lows that were made back in the end of June, and then now here we are at the beginning of August, 30 pips over the course of what is basically a month and a half is not too bad. Okay? So we have a 30 pip variance, but a double bottom for sure. And the double bottom confirmation comes by way of prices leaving below this wick, and then currently prices are way up here. So they've rallied. Subsequently, they've rallied higher. By the way, could I draw Fibonacci on this time frame? Having seen that prices have left a low, sure. The current cycle is down. The last major move here could be considered down, right? So I could do something like this right here. And if prices continue to move up higher, where is the first level that they might find resistance? This is what Fibonacci does, by the way. We had a last major move that was a sell-off. Within the context of a sell-off, Fibonacci will project potential resistance. And we're hoping this resistance will be a decision level at which prices will react by either stalling, reversing, or accelerating higher. Okay, so every one of these is a potential ceiling. And if prices get above it, it's then a potential floor. All right, but this is just projecting the resistance levels that the dollar Canada on the daily chart will have to overcome in order to retrace or move higher from this previous sell-off. That makes sense to everybody? That's what Fibonacci does, by the way. That's all that we're looking for. In the context of this downtrend, where could the resistance be as prices try to climb up? So first lesson here is Fibonacci presupposes that the market's reversing. You need a trend that's essentially, for the moment, done. In other words, if prices had not recovered, leaving below this low down here, I can't draw the Fibonacci. Just like prices reversed, leaving a high up here, prices have for now reversed, leaving this low down here. So Fibonacci presupposes a reversal before we start to assume prices are going to climb up towards resistance, right? So this is going to be the first level of resistance. But this is the daily chart, right? This is a pretty significant move. How does this appear on the 30-minute chart? It's a much smaller move, isn't it? So now I'm looking at a move from, say, here to here. So prices really didn't do much at the 23.6, which is a fairly shallow retracement. But now, if you'll notice, they're kind of gravitating around the 38.2. Okay? Notice that in the past, we've actually been sandwiched in this area before. Okay, between the 38.2 and the 50%. So in the past, that was somewhat support and resistance, and we're seeing moving forward it might be again. Again, identified by not only past price action, but now reconfirmed by a set of Fibonacci resistance levels. And we could possibly look at that 382 as now support. Okay? So as prices are climbing up here, I don't want to take the Fibonacci out of the context of the current market cycle because, frankly, this is not a great markup cycle on the 30-minute chart. Okay? We could also look at another Fibonacci retracement. Again, I mentioned there's sometimes more than one. How about this move right here? Much smaller. Okay? Now, some of you might be asking at this point, how do you figure out which one to use? Raghee, if there's more than one Fibonacci, how the heck do I know which one to use? Good question. Let's dissect one of the descriptions I've been using, which is this idea of the last major move. The last is just another way of saying most recent. Major is just another way of saying significant. Significance usually comes by way of the move being large. It's usually a size thing. Okay? And finally, move is that rally or sell-off that we've been talking about. So last major move translates into the most recent significant rally or sell-off. We're looking for a combination of those three things. And that's where a lot of the objectivity comes in for Fibonacci.